it's important to have a team because different folks bring different skills to the table, and no one person can do it all.
Yeah.
And but when you find teammates, they have to resonate with you. You want to make sure that you do a background check and that they're not some fly-by-night kind of person that's just going to like stab you in the back when things get tough, or not stab you in the back, but just sort of disappear when things go wrong.
Welcome to the Creating Wealth Podcast, where Kyle Curtin takes you on an extraordinary journey alongside renowned multifamily real estate sponsors and syndication experts from every corner of the United States. We teach you how to harness the power of passive real estate investing and witness the transformation of your wealth building strategy. Let's create wealth together.
What's up, guys? Welcome to episode 116 of the Creating Wealth Podcast. I am your host, Kyle Curtin. I am a co-GP specializing in investor relations and capital raising for multifamily sponsors. Today, we get the great pleasure of chatting with Matt Kontoff with Red Wing Capital out of Boston. Super excited to have you on here, Matt. What's going on, man? How you doing?
Hey, Kyle, thanks for having me on your show. I'm excited to do this. And I think you said I was the first real podcast interview. So the pressure's on both of us.
Yeah, no, you're 100% right. And guys, for a little bit of background, so you're going to see right before you hear this part, I ended up getting like a new intro and stuff made by like a guy on Fiverr, and like the artwork's different. This is kind of like the next phase of the podcast. Just interviewing sponsors and other folks within the syndication realm. And this is the first one, and honored to have Mr. Matt on here to kind of kickstart things. So yeah. So let's jump into your backstory, man. Kind of tell us how you got into real estate, how that translated over into, the multifamily sector, and kind of what you got going on now. And yeah.
So let's see, how did I get started? Well, I bought my first house in Denver, and shortly thereafter, my dad said, "Hey, listen, let's go in on a multi-unit property together. I'll put up a cash and you manage it." And so I found a fourplex in Boulder, right near the center of town. We bought that together and held on to it for a while. I managed it. I got tenants. I fixed stuff. I hired, people to, manage to maintain the property. And then I moved away and actually hired someone else to manage it for me. And I guess that was my first experience as an asset manager, as they say. If you'd asked me to, that at that point what an asset manager was, I'd be like, I don't know. So anyway, I hired a local guy to manage it, and then several years later, we sold the property for a profit. I wish I held on to it because it would be paid off by now, and it would just be cash flowing. Then I bought a duplex here in Acton, Massachusetts. Bought another one, and then all the while I'm reading and going to real estate meetups and thinking about fix and flipping. And this is all during my professional career as a software engineer. I went to school for computer science, worked for some interesting companies, startups. And just a few years ago, I met a guy locally at a local meetup who was doing the larger multifamily thing. And he was talking to some other young kids, I say, it's the old guy, that had been at it for a year or two, and they had a property in Lynn, I think, and I was just listening. Like, I thought I knew real estate. These guys are talking a different language. And I wanted to accelerate my efforts into that field, the multifamily investing. So I took some online boot camps and courses, read a lot. I worked with a mentor and started investing in larger multifamily properties. And I invested in a project in Florida that went full cycle last summer for like amazing returns. I'm not even say how amazing it was because you won't believe it if I told you. I'm still waiting for the K1 on that, by the way.
Oh boy.
Yeah, it's several months late. Anyway, and then I invested in some more passively, and then invested in as a co-GP in a property in Columbus, Ohio. So it's a 43-unit property. It's an A-class building. It's a new build, and it's right now it's fully occupied. We have a wait list, and it's a really cool building. And it's near New Albany, Ohio, which is where they're building where Intel is building a $20 billion fabrication plant. So there's still a ton of growth to happen in that area. So right now, I own that. I'm still invested in a bunch of LP projects. I own some Airbnb properties in Vermont, which I use and rent, and helps defray the cost of owning those lovely properties, and the duplex that I have. So, so about a year ago, a close friend of mine approached me. This is a woman that I've known since I was a teenager. We used to ski together and play tennis together in Vermont. Our parents were friends, and she has her own jewelry business. She approached me a year ago and said, "Hey, Matt, I got this land in Bali, Indonesia. That's where I built my factory. We can use the rest of the land to develop, villas or cottages or something and make a ton of money." And I'm like, "Okay, we'll go do that." So one thing led to another. I'm invested heavily in that project, and we're going to build a 27-unit hotel, a spa, and a restaurant. This is going to be an upscale, luxury, beautiful place in this lovely wooded area with palm trees and a river down below, and it's just going to be it's going to be a beautiful spot. So that's my current project.
That's super cool, man. Absolutely. It's really wild, like hearing about something like that, especially like ex-US, you know what I mean? Doing like a new build. And I know we met before, we were kind of talking about, some of the logistics of like building and financing in like a whole different like part of the world. You know what I mean?
It's very different investing overseas. There's different cultures. Actually, I have some friends who invest overseas as well. But I know in Indonesia, the culture is very different. The workers are, how do I say this politely? They're, if you find the right people and can work with the locals, and they're all locals, except for our third partner who's an expat, a German expat. Their culture is very, they can't say no. They say yes to everything. They don't tell you bad news. And so, if they don't have anything and you ask them if they have everything and they say yes, and they really don't, you really have to dig to find out the real deal, what's missing in their, what's missing for them to do their job. But once you get over that and find the right people, then they're loyal. They are not going to work for 2 or 3 or 4 months. They'll be there for years doing, whatever it is that you hire them to do. So that's a plus. And our hotel will be hiring about a dozen or so local folks to run the hotel, to be maintenance and security and staff. Just we'll have a local general manager, probably 2 of them because it's a hotel. It's a 24-hour business, and marketing and the whole 9 yards. Spa. We'll have like masseuses, and we're going to have a valet or 2 as well for our very, very, very VIP lodge. We're going to have a couple of those that are high end with their own pools, 24-hour valet service. So if you need anything, snap of a finger, you just call your valet and they'll get it.
Damn, man. Let me know when that thing's built. I want to spend some time over there.
Oh, I will. But Kyle, you can't afford it.
Yeah. That's cool, man. What would have kind of been like a couple of the most interesting hurdles for doing a project like that across the
Oh
world?
man, huge learning curve. I thought I knew a lot about real estate, but the rules are different. For instance, in Bali, there's no such thing as cost segregation. Okay, well, there's a buzzword. And there's no OSHA. I have videos of people
Oh,
working on
lovely.
site barefoot or in flip-flops, whatever. And there's the notion of insurance is kind of foreign. You can't get insurance until the building is complete. So if something happens during construction, well, that's
Yikes.
too bad. So we have to really do a very thorough review of our situation to mitigate any risks that may come down the pipe. The latest one is interesting. There's a plot of land next to our land. We were actually going to expand onto that land at some point and build more lodges for rent. But the owner of that land decided to sell all the dirt. And when I sell all the dirt, he got a bulldozer and dug down 20 feet and sold all the dirt. And so now there's a landslide risk. There's a big giant crater next to ours. We have to build a retaining wall. So it's curved balls like that. But I do want to mention that in Bali, when you're doing a development, land is leased. You can't buy land because land is owned by Balinese nationals, by the citizens. So you can't buy land until you're a citizen. So we're leasing the land long term for the 20 years, and then we're going to re-up and do another 25 years. And so we'll have at least a 45-year lease for the operation of the hotel.
Wow.
Yeah.
That's neat, man. Do you think like with something like that, like how could you kind of like cross the threshold, I guess, of like being a citizen to be able to like buy the land? Like if you had like, and I might be asking something I'm not really sure, but like if you had like a member of your team or like somebody that was boots on the ground that had Bali citizenship, like
No, we don't.
like to be able to buy the land and like work with your team, like do you think that's something that would kind of work or maybe not?
Well, financially, you work in the lease. So what happens is you lease the land for a long period of time, and at the end of the lease, the owner or owners of the land, we currently have 2 plots of land. The owners get the land back and whatever's on it. So It's a win-win for them, big time.
Yeah.
So if you build a house or a hotel, and at the end of the lease, they get all that. So just have to run the numbers with that in mind. And when you go to sell the hotel or sell the business or sell a property, you build in, your sales windfall from that.
Gotcha.
Yeah. So
That's
you're selling the business. You're selling the business and the buildings, but you're not really selling the land. The lease will go to the next buyer.
That's neat, man. That is pretty cool. That's different.
Very different. Yeah.
What would you say for potential investors in like new ground up development projects? What are kind of some of the things to kind of like keep in mind, investing in like ground up versus like multifamily or, like different types of like sub assets within that space?
So, I'll start with like self-storage. That's very simple to operate. You don't have to talk to any people. Each unit has a single light bulb, and you can cash flow right away if you purchase it right, and there's not a lot of renovations. And then for multifamily, you can get into something that has a light to medium value add, and again, you might be cash flowing after the second quarter, perhaps, when things are more stabilized. And as time goes on, your cash flow will increase year over year. But new build, it's riskier for sure. And you won't get any return until the building is built and it starts to be rented out to residents.
Yeah.
And so once it gets fully rented, then you're earning some cash flow, and usually the operator will either hold on to it for a while, or once it's filled up, they'll sell it, and then you can get a big windfall from your investment at the very end. So this is sort of a mix. What we're doing in Bali, we're building it. There's no income for a couple of years until it's completely built. But I think when it is complete and the hotel is up and running, the cash flow will be tremendous. Yeah, our boots on the ground there is a German expat, and he just has this sensibility for high-end luxury spaces. So it's going to be a beautiful place.
It's cool stuff, man. Absolutely. Yeah. Would you say like projects like that and kind of like the new construction niche, like in terms of hold periods, like when you actually, kind of start the project, I mean, like, I'm trying to figure out like the right way to phrase it, So like if you're, or, I'll start here because I'm getting tongue tied here, but, with something like that, what does a typical hold period look like for like a new construction, like type of build? Like 3 to 5 years, 5 to 7 years? I know like everything's different, but
yeah, it depends on the developer, on the operator, for sure, and what their business plan is. Some folks will want to buy and hold for a long time, and I applaud that. If you can do that and hold on to the hotel and run it forever, you have a stream of cash flow, especially if you have good managers to manage the property.
Yeah,
sit back and collect the dough.
Absolutely.
Yep. And then there's a business that you can run and build and grow, and pass on to your kids if your kids are interested in running a hotel, which mine are not. Like, yeah, Dad, no, you're just a landlord. You're horrible. Which is kind of funny. It's kind of funny. My daughter says that, and now she's a software engineer now, and she's doing great things. So maybe someday she'll come around. We'll see.
You never know.
Yeah, no, but the thing is, we're providing jobs for people. We're providing returns for investors. We're providing a beautiful place to stay for guests and tourists. Win-win.
Absolutely. Yeah, 100%, and do you picture like in the future, do you picture kind of staying within that like buy box of kind of like the, new construction, or what's kind of like your philosophy, I guess?
Short term, let's see, the future. Short term, I would like to have a little bit more cash flow, but long term, we would like to build up a portfolio of properties. We're on active GP that are simply cash flowing and just sending me money.
Of course.
Yeah, lots of money. Yeah. And then eventually, when I get really, really old, like those guys that you mentioned, the old people in the 60s and 70s, then I can start investing in as a limited partner and just sit back and collect mail-out money. Yeah, I know a guy who does that. He does very well.
Mm-hmm. Yeah, no, I totally hear you, man. I think it's extremely interesting, and I think it makes a whole lot of sense.
So as you look at this, and you're just starting out in this business, which I think is great that you really jumped in and you get your podcast and you've got you're rolling already, and you're branding and getting it out there. So I know, how do you look at it? You've got a long ways to go for your career, I imagine. And do you have a plan to retire when you're 40, or do you just, how do you look at it?
It's been interesting, man, because I've had a 5-year vision for a while, but it changed, especially, kind of jumping into the syndication sector and just focusing everything all in on it. And I actually have to kind of update my vision a little bit, to be honest with you, now that things are like completely different than they were 6 months ago, you know. But I mean, at the end of the day, like the variable that 100% will stay fixed is like my why for everything that I'm doing across everything is always to be able to net enough cash flow from whatever that type of activity looks like to be able to quit my day job as well as have my mom quit her day job. And it goes down a rabbit hole of like, you know, bringing us up as kind of like a single mom and that type of thing. And it's kind of a deep story there, but it's always, you know, kind of the fire that drives me. And to be honest with you, it's funny, man. Like that's been a 5-year goal and I wrote it 2 years ago. So it's kind of like, I'm trying to figure out how that adapts into this next part. And I'm like, okay, like what exactly do I need to do? And like, how do I like figure that part out and stuff, you know? But, yeah, no, that's as far as I've kind of thought into the future, to be honest with you, man. I mean, it's people have asked me, indirectly. I use the I need to make a physical one, to be honest with you, man. But I mean, I usually use the like the EOS traction like sheets and everything, like the vision like organizers. Like I have one for the podcast and for like the brand as a whole and that type of thing. But no, you're right. Yeah.
EOS, do you like using that system?
I do. I like it a lot. I have to implement it a lot more. The vision organizers specifically, I've fallen in love with since I read Traction a couple years ago. But I have to focus in a lot more on implementing that system, especially, you know, with the podcast and stuff like that. I do really like it though, man, you know, and I think there's a lot in that book that
Traction?
Yeah. Yep. You know, that can be applied. And I think there's also a lot in that book that's like a lot higher level than where I'm at right now. And at some point in the future, you know, that might be more applicable at the time. But, you know, as of the moment, you know, I get to kind of implement a lot more. But yeah, I mean, like my vision for, you know, like the podcast and the brands and everything as a whole now, definitely, you know, still kind of stands with like trying to create this community of people that are like-minded and, you know, want more out of life and stuff like that. And, you know, kind of bringing that into the syndication aspect of like, oh, you know, like collaboration is the only thing that I'm after in the bigger picture of like, oh, like, I don't want to do anything by myself anymore. I'm like, there's way too many cool people out there that are doing really cool shit. And like, why not? Like, I want to like be on everybody's team, you know what I mean? And like do cool stuff.
Yes.
You know, and that's kind of how everything ties in with that, you know, and just trying to kind of learn as much as I can, educate as much as I can, and just kind of like bring it all full circle, you know, as time goes on.
You know, you mentioned something about working with teams and working with a bunch of teams.
Mm-hmm.
And it's important to have a team because different folks bring different skills to the table, and no one person can do it all.
Yeah.
And but when you find you know, teammates, they have to resonate with you. You want to make sure that you do a background check and that they're not some fly-by-night kind of person that's just going to like stab you in the back when things get tough, or not stab you in the back, but you know, just sort of disappear when things go wrong.
Gotcha.
Yeah, and so like I mentioned about the land disappearing next to us, it's all about solving problems at the end of the day, and there's all kinds of problems that you need to solve and figure out. And if you like solving problems, and you know, and each problem is unique as it crops up, then you'll do well. Yeah.
Gotcha. No, that's absolutely awesome, man. And do you kind of have a couple tips for like either people potentially, you know, looking to have like GP roles in deals like now or in the future, as well as kind of, you know, maybe people outside of the real estate industry or even like within the industry that are looking to invest passively for the first time in terms of like vetting sponsors? Like I know you mentioned background checks. Like what else do you kind of could you kind of like recommend for?
But my first sponsor, I asked for a sample of his DNA, and no, I didn't.
A hair sample.
Corey check. No, I didn't do anything. when you ask for someone for their references, they're
Yeah.
going to give you people that are going to give you glowing references anyway. So it's not really a great indicator, but I was listening to one of the big syndicators, and he said, ask for 5 references and then say, no, give me 5 more. And then later on say, no, give me 5 more. And it's those last 5, those are the ones that you want to contact, because those are
Interesting.
a little further down on the list. They may give a more candid, straightforward answer. So that's one thing. Getting on as an LP, which I recommend as a first step. You need to find operators, and there's meetups, there's online communities, there's conferences, there's so many resources that one can find where these operators operate. And you can learn from them on how to vet a deal as a limited partner, beyond the syndicator. What's the pro forma look like? What are all the components of the pro forma? And then you'll learn how to investigate and research an area, whether it's a growing area or a not growing area. And I like growth. Growth is good. Whether it's a population growth, steady job growth. If the city or cities have a vibrant chamber of commerce that are encouraging business to come in, that's a good thing. So there's a lot of resources to figure that out. I guess there's a lot to learn, and I guess I want to say, when you started what you're doing, I was going to ask you, so when's the best time to plant a tree, right? I probably heard that one before. So 25 years ago, which I wish I had planted a tree 25 years ago, or tomorrow. So if you plant a tree tomorrow, in 25 years, you'll be like, wow, look at this thing. So get started.
I love it, man.
Yeah, jump in, learn as much as you can, get some books. Yeah,
I love it. No, that's awesome, really, and it's it makes a whole lot of sense. You know what I mean? I do really like that the references thing, because it's funny you say that too, man, because like I was listening to I think it was Gary Vaynerchuk like yesterday. I was watching like a YouTube video that he did, and he was just having some like conversation with somebody or something, and they were joking around about the references. And he's like, I just, like, when I hire people, I just never ask for references because it doesn't make sense. Because, like, they're going to give you, their top 3 best, like, oh, man, like, help me out, you know what I mean? And it makes a lot of sense, like, I've done it for people. Like, my buddies want to put me as a reference. Dude, I'm going to make you sound like $1 million, you know what I mean? Like, you're getting that job,
Yes.
and because it's what you do, you know what I mean? And which, depending on, the side of the coin that you're on may or may not actually be a good thing, depending on who's asking the question, and it makes a lot of sense, to kind of like keep going down the layers and separate that. I don't even like know what the word is really, but yeah, I don't even know what the word is, to be honest with you, but kind of separate that, like relationship, like strength, I guess, like kind of, yeah, you know what I'm trying to say, but, yeah, no, it makes a lot of sense, you know what I mean? And to try and get, potentially some more realistic,
Some
thoughts
feedback.
on exactly. Yeah.
Yeah.
Because the bias, I guess that's kind of the word that might be better there, but yeah, get some more realistic feedback with less bias. I think that's good.
Yeah, I will say this: the one thing that surprised me was when a syndication, a big, huge name sponsor team, when they broke up, and I'm like, wow, is that a thing? They're buying, hundreds of properties, hundreds of doors, and many properties, and all of a sudden they go their own separate ways. Well, I guess that happens. It happens more often than you think, and people will have, differences of goals or something, or want to pivot and do something else. So it's not unusual for a group to do some stuff and then for them to sort of break apart, and people go team up with different people.
Gotcha.
So it's a learning process. Yeah.
That's interesting, man. I was reading in I want to say it was the Hands-Off Investor by Brian Burke, I think. There was actually a question that stuck out at me in there about asking about like the team and the kind of like the length of time that like you guys have been working together and like that type of thing. Because that is super interesting, especially for like, you know, the lengths of time and everything that like these projects are going on. You know, it's not like it's for a flip for 6 months and it's like, all right, dude, like we'll finish it and that's it. You know, it could be like 5 years. You know what I mean? Like,
yeah, you're in bed with these people in these projects for 5 years or more, 7 years or 10 years even.
Yeah. Wow, that's wild.
Yeah.
One question I do want to ask you, man, that I'm definitely carrying over from the first couple years of the podcast to now, because it always, I love asking this question. How do you define wealth?
How do I define wealth?
Take all the time that you need. I love asking it because it's such like random
your wealth
question.
Is your net worth, I guess,
Mm-hmm.
to be technical about it. But if you're in a position where you're not working for an hourly wage or even an annual wage, if you're investing or a business owner, I mean, it goes back maybe to the rich dad poor dad quadrant, right? If you're on the right hand side, if you're a business owner or an investor, you are generating jobs and creating wealth for yourself or your investors, not working day to day, hour to hour. And when you stop working, you stop earning money. That's just like, okay, until you retire. Yeah, that's
Yeah.
So,
yeah, no, definitely.
It's different for different people. You know, there's some people that could be wealthy in their mind and just have a very simple life where they have very few expenses but live off their, investments.
Yeah, no, I agree with you, man. You know, I really like that. And yeah, that's why I love asking that question, is because there's like so many different ways to answer that. Like, it's not just like a binary, like, oh, you know, like it's this thing, you know, like that's what you'll see, you know, on Google or whatever, you know. That's what I love, is like it means so many different things to so many different people, and it's cool to kind of hear it from.
I'll tell you something interesting. My mom said she felt wealthy when she had leftover chicken in the fridge.
Hell yeah. Depending on where those leftovers are from.
Simple food on the table. Yep.
Yeah, I love it.
My cousins are on the opposite end of that spectrum. I have some cousins that have built second homes on the vineyard, Martha's Vineyard or Nantucket. And they're still working, and they're like really wealthy.
Yeah.
I got to get them to invest with me.
Yes.
Yeah.
I love it, man. So I do have a new section that I'm adding to the podcast with a couple questions that I'm excited about. So we are going to jump into a new segment on the show called Action Steps for Abundance. Matt is going to share 2 immediate action steps for the 2 dominant demographics in our audience that listen to the show. Those being, you know, potential people or potential investors, potential LPs, as well as, you know, potential GPs and more, you know, kind of like being a part of the execution of deals. So the first question, what is one immediate action step for someone that's on the fence about passively investing in syndications, or, you know, just investing passively in general?
Oh, well, give me a call.
Yes. Perfect.
No. First step, if you're on the fence, read more, learn more, go to some of the weekend boot camps. There's some virtual boot camps that are wonderful. I found the Rod Cleef boot camp, and I did that during COVID. I did that twice virtually. Nice. And it's a fire hose of information. He talks about your vision, your mindset, and then goes into great detail about the specifics of how to be a multifamily investor and syndicator. So that's,
I'm going to write that down.
Yeah. If you want to be a GP or an LP, it's a good place to start. And then obviously there's tons of books on the subject.
man, hell yeah. No, it's
yeah, some of the
I
older
definitely-
books. I have some old books from way back. And the fundamentals are the same. You have your investment, you put money down, you get a loan, you've got your cash flow and your expenses, and all the metrics that go with it. It's very similar.
Sweet. Yeah, absolutely, man. I'm definitely gonna check out that the Rod Khalif boot camp there. It sounds super cool.
Yeah, I mean, I'm not a warrior, I'm not his program, but I found it very educational and inspirational at the same time.
Cool. Absolutely. I'll keep you guys updated on that one. I'm gonna check it out after this call there, but
Yeah.
love it. And the other question is, what is one immediate actionable step for GPs looking to grow their business?
I don't know. Keep networking. Keep looking for deals. Build your team in your target markets. There's 3. And again,
Perfect. Yeah.
keep networking and keep learning, because there's always stuff to learn. Yeah.
Sweet. Yeah, no, that's awesome, man. And yeah, like guys, we were talking about before we hit record there, like just the power of like how much there really is to learn, within this this ecosystem. I was telling Matt, I was listening to a podcast with I forget who it was. I forget the podcast too, which is is what it is. But
We can go back and edit this back in and say who it was.
Yeah, exactly. But I was listening to a podcast recently, and there was this gentleman that was being interviewed, and he raised capital for like 20 or 30 years for syndications. And it's interesting, kind of like the ceiling of your knowledge, I guess, at different points in time during your journey. And like for me, definitely being on the early side of the spectrum, having seeing like a 50 or 100 unit deal or something like that is friggin' wild. But like all of a sudden when you start to like Matt was saying, the more that you like research, the more that you constantly absorb, in terms of information, having conversations, networking, that type of thing, you're going to be exposed to a lot more information and a lot higher of a ceiling as time goes on. Because to finish my thought, like what I was saying was, like a project like that is wild to me, right? And then you listen to a podcast with someone that's been doing this for decades that's like, oh yeah, like there's investors out there that don't write checks for less than $20 million, like won't even like look at it, and like, holy shit, like like whole nother world,
Yeah.
and family offices and like all this crazy stuff. It's wild. There really is so much to learn. It's cool stuff, guys.
I do want to add one thing that as a GP, it's really helpful to get a coach or a mentor or somebody to sort of guide you along the way, and inspire you and teach you and whatever.
Yeah, no, I definitely agree, man. And it's exactly, kind of pairing that up with like so much to learn, like it's being able to keep kind of a steady course, with someone that's a lot more experienced than you to kind of keep moving forward, and kind of accelerate that as much as possible. I love it.
Yep. Getting a coach is key, and then you want to figure out, what part of the business do you want to be in? Do you want to be in finding the deals and talking to brokers and just beating the bushes to find off-market deals, or do you want to be analyzing the deals, which is really a spreadsheet experience kind of thing? It's numbers, or do you want to be managing the managers and the asset management aspect of it, or raising capital? Different skill sets for different aspects of syndication, for sure.
That's awesome. Yeah, no, it's super cool, man. And like that's the thing that's extremely cool is like there's a lot of different types of roles that might resonate with you, not resonate with you, that type of thing. So just kind of finding the one that fits with you and running with it.
Yep.
But cool, man.
So personally, having owned and managed real estate on my own for over 30 years, And having been a software engineer, my strengths are basically on the underwriting side and the asset management side. Just because that's the experience that I have, and I've done both for several years. I'm part of the asset management team in Ohio. I was a VP of operations for my synagogue most recently, which was a great experience. I did that for free. So that's like managing a commercial property. So that's kind of my wheelhouse. So if there are folks that need to talk to an asset manager or underwriter, I'm willing to help out and provide the guidance if I can.
Absolutely. Yeah, I definitely appreciate it, man. 100%. And that kind of transitions, man. Thank you so much for coming on here, Matt. Where can people contact you? I'll put everything you want down below.
I owe you a document. So you can reach me on LinkedIn. It's just Matt Kontoff on LinkedIn. I'm the only one there. Or you can email me at matt@redwingcap.com.
Beautiful. Thank you so much, Matt.
That's a wrap for today's episode. We want to thank you for being a valued listener of the Creating Wealth podcast. Make sure to visit www.creatingwealth.com to connect with us. Dive into our ever-expanding library of informative blogs. Get access to our private investor portal and explore a wide range of additional valuable resources. Stay tuned for our next episode as we continue to create wealth together.